Hello, welcome back. We're at Mines and Money, and I'm with Atlin, the CEO of Canagold Resources. Atlin, good to see you.
Nice to see you.
So, for those, obviously first time on the program, for those less familiar with the story, just give us a really brief company overview.
Yeah, for sure. I mean, Canagold, it's a TSX listed company, which is moving the highest grade undeveloped gold project in Western Canada through bankable feasibility and permitting.
Good. And before we run into the actual project itself, would you mind just giving us a bit of background on the capital structure of the company?
Sure. Canagold is a very unique company. We have about 43% as a private investor, as our cornerstone investor, which is a group out of Colombia with 2 active gold mines there. And they provide a financing commitment to the company to move the project from the current state through bankable feasibility and permitting. So a very unique company.
Okay, and what about things like shares outstanding, market cap, cash in the bank, burn rate, that sort of stuff?
So look, we are about $35 million market cap. Again, cash in the bank is as much money as we need to get going. And really the focus right now, it's bankable feasibility and permitting. So we are well funded for that. And, additional funding will come as a commitment, as I mentioned earlier, from some value investments, which is great to be in. And that allows us to focus on execution. So why is it different and why it's unique? Because as you know, the junior space is a very challenging environment. And even in the current gold price, which is pretty good gold price, the juniors are still struggling to raise capital. We are very uniquely positioned to execute. Regardless what the markets wants to do, we have the capital commitment to get things done. And this is really why we have completely shifted the focus of the company from what used to be exploration to really pre-production and execution right now.
So just before we go into, I guess, the pathway to production and I guess the financing, how you're going to do the permitting process, etc. Tell us a little bit about the deposit. Obviously, you just mentioned there it's one of the highest underground high-grade deposits
in Western Canada. Yes.
So talk us through the number of ounces, the grade, the depth, how this actual ore body looks.
Sure. So we're talking really right now about 1.1 million ounces of measured and indicated reserves, roughly about 11 grams per ton.
That's good.
That's really good because, it allows us to contemplate and model about a 10-year mine life with an annual production rate of roughly about 100,000 ounces of gold. The project has a, historic PEA on it, but really, as I mentioned to you, because of the fact that significant amount of money have been invested in the project historically, we're able to move straight into feasibility of the project. What we are targeting right now, as I mentioned, a 10-year mine life, and all-in sustaining costs is somewhere around $1,100. Capital cost that's around, $200 million. That's all kind of our targets, and I think are realistic targets today. And, right now, the project, it's really set to advance, and it's advancing quite well through the permitting process in the same time as we advance engineering and feasibility.
Yeah. Just based on the current network you've done at the moment, what are recoveries looking like? And would you be able to just talk about the current, I guess, idea around how the mining method would work as well?
Yeah. So really, we're looking at a relatively small underground mine, roughly about 1,000 ton a day, doing down to about 500 to 600 meters deep. We will be producing, high-grade gold concentrate, and we are doing a trade-off analysis whether we produce physical gold at site or we end up producing a concentrate. So this is part of our trade-off studies right now as we advance the feasibility. And of course, our objective is to pick the most simple process and that provides the best economics. And both have potential, and we will be making a decision as things progress into next year.
Okay. Obviously, because I think it's quite important that there have been, especially here in the UK anyway, there has been an underground very high grade gold mine that has run into some issues. I guess in terms of risk mitigation, the way that you're looking at this, how easy is it actually? What actual mining method will you be using to get the gold out of the ground? Is the material more sulfide? Is it oxide material?
Yes.
Are you foreseeing any challenges with the mining?
Look, we have a very unique situation again because this is a historic mine. Right, so we have the historic production, which was around 250,000 ounces of gold being produced from this project between 1945 to 1950 something. And really, when you look back at that production profile, we are seeing the same type of grades that we're planning to mine today. So that's a good, real life experience, I guess, that the mining was possible and they were able to achieve the mine grades that we are hoping to achieve. It's a very straightforward ore body, very solid ore body. We're looking right now at cotton field, possibly again in an effort to limit dilution, because again, being remote where the project is, you need to, minimize dilution and then process as much gold as you can, not waste. So this is all part of the engineering we're doing right now. And this is not a big project from a throughput perspective. 1,000 ton a day is a really nice size project. But really, despite being 1,000 ton a day, when considering the high-grade nature of the deposit, we are still able to aim for 100,000 ounces of gold a year, which is a nice, size for the project.
So that would also suggest, just to touch on recovery rates,
yes,
that would suggest that they're pretty decent?
Yeah, recovery is, again, out of, depending on which way you go with the process, we are aiming for recoveries in the 90+% recovery.
I wouldn't mind touching on, obviously you were mentioning there CapEx around 200 million.
Yeah.
So you've got very supportive partners.
Yeah.
How are you looking to, I guess, you've obviously got the permitting to come, you've got the feasibility to come out soon, but say there is a final investment decision.
Right.
In your mind, how much of that are you looking at potentially selling some of the projects at the actual project level itself? Are you looking at a higher debt proportionality? How are you actually looking at how you can finance this without being too dilutive based on the current market cap?
So it's a very good question. And I think, the reason why we're taking a different approach on feasibility is that we want to make sure that we're engineering a project that we trust, that we can build and we can make money, right? So again, most of the juniors, without naming any, really at this level, at this stage that we are, they do a feasibility for the sake of, just possibly raising even more capital, right? We take a different approach. We're doing a feasibility to be able to actually have a profitable project. If you look at Sun Valley's perspective, as a whole, as a group, they're probably worth somewhere in the neighborhood of about $500 million, and they do have real cash flow coming out of the existing mine. So, can they finance the entire project? Probably. And do they really want to finance? Probably not, right? Because, you don't want to have all your eggs in one basket.
Yeah.
But again, we have been doing everything right now within our means to possibly execute all the way through and build the project, right? But at that level of financing of $200 million, which would be a combination of debt and equity, and if we can achieve the economics we're targeting, which I think, we have a realistic chance of achieving, it's a nice financeable project. So you have many options of debt financing, equity financing, and we're not talking very large numbers, right? Especially for a Canadian project in Canada, which will eventually have the support of the First Nations and the BC government, will be a nice, attractive story for the BC banks too.
Yeah.
There are Canadian banks which love Canadian projects, right? So, I think I'm not worried about how we're going to finance. I'm more focused on making sure we come up with the right economics of the project, and then I think the funding will be available.
Okay. Talk me through the permitting process, because you're going through that at the moment.
Yeah.
Are you foreseeing any issues
about
permitting the mine?
Permitting. Again, permitting is one of the largest single risks outside of the non-technical risks of the project, right? I can tell you what's been our experience so far, because we've commenced the permitting process with the BC Environmental Assessment Office earlier this year. And I have to say that we've been blown away by how quickly and how professional they were. Literally, it exceeded our expectations. Very professional. We have regular meetings with them. Projects are moving very well through the process. We had a meeting with Minister Osborne in Victoria a couple of weeks ago. She's here in London again supporting the BC project. So, I think I would say it's been a great experience with the BC government. On the First Nation side, we're trying to build a true partnership with the TRT First Nation group, which is with projects in their territory. And we're making good progress. We have a collaboration agreement that sets a framework to eventually get to a consent agreement. We have a technical working group that we've set up together with weekly meetings and engagements with them. So it's a process, of course, but I think we're both positioned to eventually come out of this process successfully and eventually, have the project permitted as the next new mine in British Columbia.
Good. So I guess, I wouldn't mind thinking about timelines.
Yes.
So how far along of the permitting side of things are you? And also alongside that, how far along are you with the feasibility study?
Yeah. So let's talk about permitting since we've just closed on that. Really based on the BCEA process, and we're going to be doing some concurrent permitting within that process. It's really a 3-year process, right? Then we've started early 2023, so you go 23, 24, 25. So by the end of 25, hopefully we'll have a completed permitting. And again, as I mentioned, we're doing in tandem engagements with First Nations, so we know everything is done together.
Yeah.
So really, if you look at it, the production decision would come probably somewhere in late 2025, and then an actual start of construction 2026. The feasibility study has been started late last year. We are working with the goal to have it probably completed during 2024. But again, we take a very different approach. We don't just want to complete the fees for the sake of having a fees. We want to do it right.
Yeah.
Right? And this is the reason why we are not in any rush. We're doing things solidly to advance the project to feasibility, and again, a goal to have it completed during 2024.
Okay, by the end of next year. I guess, I know you were sort of saying that you're weighing up different options for feasibility at the moment, but in terms of just the outputs, you've done a lot of infill drilling, the resources quite well, I guess, drilled in terms of measured and indicated.
Right.
Are you expecting a better economic outcome than the previous PEA?
Again, PEAs are PEAs for a reason. They are very preliminary.
Yeah.
And, I would caution investors generally for any PEAs, because they are called that for a reason. I think the metrics or the economics we are targeting right now, they're very much in line with what's happening in the market today. What is a financeable project today? Where do we need to be to be able to track the investor interest and investor money to build a project? The numbers again that we are targeting is $1,100 all-in sustaining costs. Capital cost again, I said around $200 million Canadian. We might have 10 years, $100,000 a year. And those are, the key elements of what I think realistically we will be targeting, and we are working towards, right?
Yeah.
PA's numbers, RP's numbers. Things have evolved, as you know, cost-wise in the industry. Inflation is affecting the mining industry as well.
Yeah.
One good thing is the way the gold price is moving. I'm personally bullish on the gold. I think fundamentally gold is established a very solid foundation at $2,000, which is great. And we're moving higher from here, but having that foundation at 2,000, it helps a lot. So it's should be an attractive project.
Good.
Yeah.
Just, I guess, last thoughts. What will be happening in the meantime, whilst obviously the permits are going on and the feasibility? Can we expect any news flow on anything else within the company over the next 6 months, 1 year?
So unfortunately, there's going to be a very slow news flow. But despite that, there's lots going on with the company. We are actively working, as I mentioned, all the things touched on before: permitting, engineering, feasibility. So yes, hopefully we'll have more updates as things progress. But for the fees, for example, we can't talk about it until it's done.
Yeah.
We can't have partial disclosure of feasibility. So, our hands are tied there. I'm hoping for more progress on First Nations and things that we're progressing that way. The other thing that, through the strategic shareholder that we have, we're very actively looking at M&As. Can we increase the company? Are there any other projects that will be complementary and accretive to Canagold? So there may be news around that, because I still think there are some interesting opportunities out there that through our current team and investor base, we may be able to take advantage of.
Just I guess on the M&A side, could you talk us a little bit about your neighbours around you? Sort of, are you isolated on your own, or are there other mines in the general area?
Yeah, so it's a very good question. I mean, as you know, BC, is a home to many projects and many companies. Some very small, some medium, some larger ones. And again, not all the projects are or have a chance to become a mine.
Yeah.
There are actually very few of them.
Yeah.
And this is really what we are going through. We have a whole team at Sunvalley. It's about 70 technical people, engineer, geologists, that they are sitting in Colombia. We have full access to it that we're using to review those projects and decide, which one is solid, which one is not.
Yeah.
So again, despite being a very big pool, it's also a very small actually pool of real projects that have a real chance of making it through.
But is there anything close to home, I guess, close to your current asset that potentially looks attractive, or are you looking more generally across Canada, across BC?
Yeah, and so for there's really nothing literally close to our project. We are in a very unique spot in British Columbia. It doesn't really matter. I think at the end of the day, it's projects that maybe they're close to infrastructure, close to power, roads, things like that. That will make a huge difference. Or else, like we have our project, you need to have a very high grade, like we do, to pay for not having the power and the roads next to you, right? So those are the two type of projects that, we're looking at. And there are some attractive things, as I mentioned in BC. There are attractive things even outside British Columbia that we'll be evaluating. So,
and do you see yourselves, just as a final thought, looking very much into the future? Do you see Canagold as the owner-operator of this, or do you see potentially your partners or someone else coming in to potentially operate this underground gold mine?
I think, again, Canagold, through the partner that we have in Sunvalley, will eventually be the owner-operator of this mine.
Yeah.
And really, this is a reality. If you look at even Pretil, they had to operate for 2 years, 3 years before they got bought out. In my opinion, Skina, which is a great company and a great project, they have to build a project. I highly doubt nobody will buy them now, right? Because it's typical. Now, the majors, they don't want the risk of building and figuring things out. They don't mind paying a higher price when things are done and they work, right? So I think any company that's at the stage of building something in British Columbia, they almost decide to build it. And then maybe M&As comes later. Right? There are some exceptions to this rule. And generally, this is my observation.
Yeah. All right. Well, exciting times.
Yeah.
Thank you for your time, Atlin.
Thank you.